Hello all. Thank you for joining us today for our weekly update. This is Jessica Counts, Sales and Events Manager for the California Hotel and Lodging Association. I'd like to first say if there is any media or any reporters on this call, to please exit now. This information is for hoteliers and not authorized for the media usage. So thank you. And as many of you have joined us for today's presentation, please consider CHLA as a resource. We are here to support you and provide reliable information on how to manage your business. So you may have already noticed we plan to hold weekly webinars every Thursday to provide you with a timely state update until further notice. And we will be recording today's presentation and posting it on our website at calodging.com. That will be found on the coronavirus information and resources page, along with where you can find our archive webinars relating to COVID-19 as well. And I would like to reiterate that CHLA has been very engaged in our advocacy efforts, so we will continue to work with the government officials to obtain fiscal and regulatory relief for the industry. So please, again, use our website, calodging.com, updated twice daily for you. And any questions during today's presentation, if you could please go ahead and submit them through the toolbox at any time during the hour. Your questions are important to us and provide additional insight on how we can service you during the pandemic. So again, if there is media or any reporters on this call, please exit now. And we will go ahead and get started. So our president, Lynn Mohrfeld of CHLA, will cover some of the latest state updates to keep you informed. And go right ahead, Lynn. Thank you.
Great. Thank you, Jessica. I appreciate all the technical assistance on this. Good afternoon, and thank you all for joining us. So in addition to my update on the volunteer opportunities, and then I was going to look at the employee opportunities as well, but we just had a press conference. The governor's press conference came out at 12:30 today, so I've got some new information. So I'm going to skip that section so I can concentrate on the volunteer opportunities. After my presentation, you'll hear from Jennifer Davis, Senior Vice President at TMC Financing, who's going to provide some insight on navigating the SBA loan process. So first of all, please be healthy and practice social distancing. This is not a test. If we don't take care of ourselves and those around us, our business issues are going to be the least of our worries. So please mind all the health initiatives. Thank you. Okay, as we've repeatedly mentioned, we're constantly updating our website with information related to COVID-19. We're very much trying to make this your go-to reference for the California hotel industry without constantly barraging you with emails, with only snippets of information. And given that the information is changing so quickly, we just want to make sure that we can get it out to you as quickly as possible. If you haven't already, visit the website, utilize these tools, and if we don't have what you need and you can't find it, email us at covid19info@calodging.com, and we'll try our hardest to get your answer. Speaking of our website, this week we've added the latest about the Paycheck Protection Program, which Jennifer will talk more about, some sample signage for your properties, summary guidance on requesting the property tax deferral, which is very important, and some cleaning protocols that everyone should know about. So I think that we've attached these to the website and the handouts, so they're in the toolbar. There should be 5 of them, and you can download them from here, as well as get them on our website as well. So please help yourself to those resources. All right. Finally, there's a lot of information everywhere, so please email us if you need somewhere. If there's an answer, undoubtedly we'll know where to get it, or we'll know it. So please lean on CHLA for what you need. We work for you. Okay, so let's get started with the volunteer program. These change virtually every day, and as mentioned just a minute ago, the governor added yet another curve to this process, and so I'll try and touch on those today as well. And again, we don't have all the information for these, so we'll get on it. I'll also touch on the hosting first responders and healthcare workers, which is what the governor went over today, and there's some county-wide efforts that are going on in that realm too. So there's 2 models that are being used. One is, and there's several populations that are being housed. In regard to the models, you'll see the whole property leases and the essential room block. And basically, their room block agreement, the essential, the occupancy agreement, and the state and county are usually referring to these as occupancy agreements. So let me talk about the lease versus occupancy agreement, and then I'll dive into the populations that are occupying these rooms during the crisis. So before I start, let me pause to say that to date, no hotels have been commandeered. I mentioned this last week, and I'm going to reinforce it this week. This still could happen. I just don't see it as a realm of the possibility. And in my continued discussions with the state, county, locals, multiple people everywhere across California, no one sees this as a likely scenario. So no one's getting their hotel commandeered. Okay. So on the whole property lease, sometimes referred to as a buyout or a property takeover, it's pretty complicated. So this is something your property is approached about. Expect a pretty detailed 3 to 5 day process. So it's going to be kind of a significant contracting process. Lately, in the last 10 days, we've only seen whole property leases for what's being referred to as hotel to hospital conversions and hosting first responders or healthcare workers in a special case from the county. So both of these opportunities are limited. I haven't yet seen a hotel to hospital conversion. I know in San Francisco, I think there's a hotel that is ready for that, but the county has not yet executed that agreement, or they don't have that need yet. And then the first responder healthcare buyouts are happening maybe at 1 to 2 properties per county, and usually in larger full service type properties. So those are pretty limited. We have heard of counties, please note, we've heard of counties looking at lease to buy options, as well as the initial round of leasing whole hotels for COVID exposed or nursing home assisted living populations that need social distancing. For the most part, these efforts are well underway, or they've already happened. And then finally, we're seeing these in 90 to 120 day length with 30-day extensions. So on the complete leases, on the whole hotel buyouts, whatever you want to call them, there's 3 big check boxes: your lender, your insurance company, and if you have one, your brand or franchise. As you can imagine, each one of those are going to be significant discussion. Okay? So definitely pay attention to those and be prepared for those. That's really the long timeline on these, is the discussions with all the different players in this. You're going to be using your hotel for a use that it wasn't created, marketed, or designed for. So your insurance company, your lender, and your brand is going to want to have some kind of input in that, and they can all provide you guidance as well. All right. So now let's go to the occupancy agreement. All right. These are easier to contract, but trickier to implement operationally. Contract-wise, they're typically the same length, 90 days with 30-day extensions, and function mostly like a room block or group sales agreement. Most hotels are going to be familiar with these agreements, and while you should certainly check with your lender, and especially your insurance provider and franchise company, those hurdles are going to be easier. By now, almost everyone that needs to be involved in these has some kind of familiarity with these agreements. So in theory, it should be easier to do these agreements. We have templates for these on the website, and the volunteer hotel opportunities handout that we have for the webinar, that has links for each one of those as well. Okay, for the tricky operational issues I mentioned, I'm going to explain those in relation to the population. So some will overlap, but you'll get the picture. Okay, first we have the COVID-19 infected. These are rare for hotels, but as the crisis goes on, hotels are one of the natural resources. So as I mentioned earlier, I think pretty much those are underway or contracted for. But if they aren't, if this crisis gets worse, that issue is going to come back, and that population is going to need to be housed. Your existing hotel employees and your operations are going to have little to no interaction in that scenario. Okay, so next we have the COVID-19 exposed and who are symptomatic, patients who are not exhibiting any symptoms. These are the ones that need some social distancing, like SROs, single resident occupancy or residential hotels, assisted living facilities or nursing homes that we've read about in the media lately, as well as those that are being referred to as young and old populations of the homeless. So the operational issues obviously become more complex when you mix guests with these populations. You have to start thinking about where everyone's located, key control, taking cleaning protocols very seriously, and who is going to provide the PPE equipment for any cleaning. Keep in mind that PPE equipment is relatively scarce and hard to come by. So in terms of contracting for these populations, you're going to need to think about that when you're cleaning these rooms, and you need to think about that in the contracting phase. So overall, staffing is going to be a concern. Please note, if you close and you intend to reopen, your existing employees, and we've seen this in several hotels, they may not be able to come back. They may be caring for others. They may have kids at home from school. In some cases, they may be self-quarantining themselves. Also, we've seen recently the current unemployment benefits they receive are a factor in their decision to return as well. So those are all considerations for restaffing your hotel. And then for the employees that are on staff, some of them are going to be fearful to service those guests. So right now, in terms of any of these agreements, no one is going in and doing daily housekeeping or renting the room more than absolutely necessary, if at all. So you're seeing amenity drops and laundry pickups are the norm, with some hotels, regardless of the guest type leaving the rooms unclaimed for like 1 to 3 days. It's all over the board in terms of what that recommendation is. But a lot of the housekeepers do feel more comfortable when those rooms are left unoccupied for a while after they've been occupied. In Los Angeles and now in San Diego as well, face masks are required for employees and guests. And I would imagine that requirement is going to start showing up in other counties across the state. If a guest does not have a face mask, the employee or the hotel has the opportunity not to service that particular guest. So you can require the guests to wear the face mask. You don't have to service them. All right, now the homeless populations. As expected, this is now being politicized, and in my opinion, is extending well beyond COVID-19. These are not typical hotel guests, and therefore, well, they require a lot. So let's assume the homeless population with substance abuse and mental health issues are being handled in healthcare facilities. The practicality of housing individuals who've been unhoused for any length of time is challenging in the best of times. The purely physical limitation of having them stay in their rooms will need to be managed. The county will need to provide adequate services, known as wraparound services, such as social and healthcare workers and security, among others. And there's the effect of constant occupancy for an extended period of time by the homeless population. Both contractually and from an operational perspective, your rooms will need to be protected, maintenance will need to be performed, and typical hotel services will need to be provided. This is key. The putback condition, or returning the rooms in what the legal councils are telling me is called like condition, is going to be a very key component to housing the population. Some hotels are even discussing a type of certification that they have after the contract is over. So some hotels are requesting that the county certify their hotel as being clean, so that they have that for other public entities or future guests or whatnot. So we're seeing all kinds of different things in there. We've even heard of one property requesting, and I don't know if they got it or not, they wanted, if they were going to house the homeless, they wanted all their mattresses replaced. So things like that you're going to have to think about. And then, while certainly a very, very secondary issue in the midst of a health crisis, please be mindful of social media and other media issues. As some of you may be aware, there was a Ayers Hotel in Laguna Hills. They were forced to stop working with the county due to the community and the city backlash. I think there was threats of litigation as well as protesters. So something to think about. That particular hotel was located in very close proximity to a senior vulnerable population. So that may have had an impact on the entire process there. But again, something to think about, but certainly it's a secondary concern. And then finally, we're seeing a lot of contracting for first responders and healthcare workers inside and outside the government process. This has been so prevalent. So the governor announced a program available on caltravelstore.com today in a press conference. It's still not quite ready. They have an email up there, but I wouldn't encourage anyone. I don't think there's anyone answering that email. Matter of fact, I know there isn't right now. So your request will just sit in there. The brands are working with the state at this point, and CHLA is serving as an interface to try and provide discount codes for first responders similar to a voucher program, but trying to run it through the GDS and the central reservation systems as well. So we're working on that, and that'll happen. But then keep in mind that individual fire departments, hospitals, we've seen Kaiser, Stanford, some medical facilities in Southern California, they're reaching out to the hotels directly to house the various populations of essential workers as well. So in addition to the government getting involved in this, we're now seeing the private industry step in, and rather than wait for the government to have these programs and look at this, the private industry is stepping right in and contracting directly with the hotels. So some of you may get approached by that. Finally, Hilton and Marriott, and I'm sure that others are going to be announcing that they have a program to host first responders and healthcare workers, and they're working through all the healthcare associations to provide those. Those are usually on individual one-off basis, where someone like a Kaiser is not involved, but perhaps it's a smaller facility, but we're seeing those as well. So I'll stop right here. And then I'd like to turn it over to Jennifer Davis, Senior Vice President of TMC Financing. Jennifer is based in Southern California, I believe in Orange County, has over 25 years of experience in financial services, and can provide you with an overview of the current SBA landscape. Jennifer?
Thank you very much, Lynn. Greatly appreciate it. Thank you to you and your team for including me today, and thank you to all of you in attendance. Lynn, if you could jump to the next slide. I believe at least the slide I see here still has volunteer. Oh, no, not that one. Keep going. Wonderful. So I'm just going to touch on the CARES Act today. As you know, $2 trillion in economic relief by way of a stimulus bill. There are 3 components to this, 2 of which are loan programs available to small businesses. The third is a debt relief program. I'm going to cover each of them briefly and make sure that we have some time for questions at the end. You'll notice that there was some, an analogy was used today, and I really like it. It's as if we're walking through the fog and you can see, a foot or 2 feet in front of you. That path is clear. You really just don't know what's coming next. So keep in mind everything that I'm going to share with you is kind of information that we have available to us as of today. The SBA continues to issue guidance, continues to issue interpretation specific to really the Paycheck Protection Program and the Debt Relief Program. But again, so I'll share with you the information that I have as of today. So there definitely was some information that was a little unclear in the beginning. We were originally told that a borrower cannot apply for both loan programs. That has since been clarified, and you can apply for both, however, just not for the same use of the loan proceeds. If you want to just go ahead and to the next slide, that would be wonderful. So the Paycheck Protection Program, I'm really explaining this program to my clients as, think of this as kind of a short-term opportunity for an injection of cash. Again, it's specific to payroll. That's how we determine the amount. So you take your monthly average payroll over the past 12 months, you multiply that by 2.5, a factor of 2.5, and that determines the amount that you can borrow. This is limited to businesses that have fewer than 500 employees. There is a forgiveness opportunity. I'll get to that in a moment, but in the event that it does convert to a loan, it's a 2-year loan at an interest rate of 1%. All clients are being encouraged to work with their current lender, specific to, or their current bank, specific to this loan application. So again, all applications are through a 7A lender. Majority of the large financial institutions, regional financial institutions are 7A lenders. And then there are some what we call non-bank 7A lenders in the marketplace that are facilitating these applications as well. Again, use of proceeds, payroll, health benefits, rent, mortgage payments. In order to be eligible for the forgiveness, you need to spend 75% of the loan proceeds on payroll. You can use the other 25% towards the rent, mortgage payments, and utilities, but 75% needs to be spent on payroll. There also is an FTE component of this. So it's not just the payroll amount, but there is a headcount component to this. And CHLA has posted a calculator on their website that's been broadly used that will help you better understand the eligible items that can be used to calculate the loan amount. And then there's a second piece to that calculator that helps you understand what the potential forgiveness amount. Again, the forgiveness, you'll need to present the documentation to your lender, and then they'll make a determination on that amount to be forgiven, and they'll receive repayment from the government. Let's go. One other thing I wanted to mention on this, it's not on the slide, but the affiliation rule has been waived for the NAICS code starting with 72. So a number of you may have had experience with affiliation rules specific to hospitality lending. They have done away with that rule. So if an individual, say, has 3 different locations, each with less than 500 employees, it's my understanding that you can apply for the Paycheck Protection Program for each of those individual locations, assuming that your company starts, or your company code starts with the 72. But again, you're not going to be subject to the affiliation rules that a number of us were subject to upon obtaining a loan. You want to go ahead and go into the next program. Economic injury disaster loans. So again, you apply directly to with the SBA. We've included the link to that application. I'm describing this as really longer term impact. Beyond the payroll injection and keeping people employed and keeping payroll in place, there will certainly be much longer term impact as a result of this disaster. So again, this is through the same group that handles what we've had: floods, hurricanes, fires. This is that disaster division of the SBA. The loan amount is up to $2 million. There is not a forgiveness component to this loan. It's my understanding that there is 6 months payment deferment. So once you obtain the loan, they will defer the loan payments for 6 months, but there's no forgiveness component to this loan program. It's you do not actually apply for a specific dollar amount. It's a relatively short application. You put some information in specific to your sales and some other questions, and then the SBA will make a determination specific to this loan amount. It's, again, up to a 30-year term at a rate of 3.75. Now, this slide here states no guarantee or collateral requirement. I actually just had a borrower that did receive this loan, but they did ask for a UCC lien. So it looks like there may be some collateral. I know this loan program does not require collateral for sure up to $25,000, but it looks like we are seeing some collateral requirements as this loan is coming to market. And then again, use of proceeds. It can be used for payroll, but future payroll, not whatever you would include in the Paycheck Protection Program, any other fixed debts you have, AP, any other bills, anything that you need to manage that has been impacted as a result of this disaster, or you're struggling with as a result of this disaster. We've got one more slide here. I think the third slide is really about the debt relief. So this happened automatically. So anyone that has an outstanding SBA loan, whether it be an SBA 504 or an SBA 7A, the government is making those loan payments for the next 6 months. If you have an SBA 504, you probably noticed that as of April 1st, your government portion of that SBA 504 loan was not debited. Bank loan, you're still obligated on the first trust deed of the 504. You can certainly reach out to that lender for deferment if you haven't already. Now, there is no forgiveness. I'm sorry, this is 100% forgiven. This is not a deferral. So again, the U.S. government is making the payment on your SBA 504 government portion of the loan for the next 6 months. This is the case for the 7A loan program as well as microloans. I've heard on the 7A loan program, because that automatic payment is managed by each of the individual financial institutions, some payments may have been debited. For the month of April, you want to reach out to your lender to work through how they're going to remedy that. But I don't think each of the financial institutions can respond as quickly as the servicer for the 504 loans. So again, and then it's our understanding for any new loans that this could come into play as well. I'm going to go ahead and pause there. I think I've taken most of my time. I want to make sure that we have time for questions. I'm going to turn it back to you, Lynn. Thank you.
Thank you, Jennifer. This is Jennifer Flores, Senior Vice President with CHLA, and I'll be navigating the questions today. As a reminder, if anyone has a question, please type them into the toolbar if you haven't already. Okay, Jennifer, we do have some questions for you. The first one is, what is the do you know the status of the SBA bridge? Not the PPP, but the actual SBA Express.
The SBA Express loan used to be up to, I think, $350,000. That's now been extended up to $1 million. That's a loan program that's administered by 7A lenders. And if anyone's interested in pursuing that request, it's typically a 3-year interest-only loan, and then it converts to a term loan for the remainder 7 years. So you would want to reach out to your existing lender to see if they're participating with that program.
That was the other question, because the comment was that many banks not offering these express loans. Okay, so reach out to your lender. And I would agree with that
comment. Yeah, unfortunately, I would agree with that comment. That the loan program hasn't really been widely used. I only know, I think, one major financial institution that has offered that loan program. And part of the reason is because it came with a limited guarantee. I believe it now comes with a 100% guarantee, but a number of our financial institutions were just overwhelmed with these paycheck programs. So I would suggest maybe let the dust settle a little bit specific to the paycheck program, and then come back and revisit and see if they're going to participate with the Express.
Okay, thank you. And the next question has to do with the PPP loan. They're asking if they're required to bring back all the employees they had prior to the COVID-19 layoffs, because they're concerned that they will not require as much staff as before.
It's my understanding that the forgiveness calculation has an FTE component to it. I would encourage you to go on to the calculator that's on the website. But again, the final guidance specific to that we have not seen in writing, but it's my understanding that there is. So keep in mind, if it's not all forgiven, again, if you're short on the FTE, as long as you spend the 75% on payroll and the other 25% on utilities and rent or mortgage interest, you still could have it potentially be all forgivable. So play with that calculator a little bit, maybe do some estimates in terms of what your reduced FTE may look like, and hopefully you can get to the point where it is all forgiven. If it's not all forgiven, it's going to be a 2-year loan at an interest rate of 1%.
Okay, thank you. Someone had a question that they had their PPP loan approved, but there was no mention of how to use that loan, no documentation at all. Do you have any suggestions for them?
It's my understanding that the lenders are pulling SBA numbers, hence they're getting loan approvals from the SBA, but I'm not aware of any disbursements as of yet. It's my understanding that they're still waiting for guidance specific to what forms need to be signed on behalf of the clients from the SBA. And maybe some have made disbursements on their own, they're just making their own determination. But it's my understanding that the lender will disperse the money to you. A suggestion was made to open up a separate checking account for those loan proceeds so that you can just easily manage how much you received, the disbursement of those proceeds, so that when it's time to prove that you spent on eligible expenses, that might be easier to track. But that money should be coming from the lender once they have the green light to make the disbursement.
Excellent. Also regarding the PPP, can non-U.S. citizens apply? Do you know?
I know that the payroll, the employees need to be on the payroll, U.S. employees, right? So U.S.-based employees. I haven't seen anything specific to non-U.S. citizens. I would assume maybe it's the same qualification that you would for an SBA loan, where you have to be a permanent resident alien, but I haven't seen guidance on that. I encourage you to go to the U.S. Treasury website, and I believe that there is, CHLA has posted kind of a business guide specific to that on the website, but that website kind of has the most recent information that's available. It includes what we call the interim rule issued by the SBA. There's some updates to that interim rule, and so that's probably the most detailed information that you would find, and that's what the lenders are using as they're managing through this process.
Great, thank you. Would you recommend that people sign up now or wait, and should they sign up both for the PPP and EIDL now?
I would definitely get in line for the EIDL if you have not yet. As you can imagine, there's going to be thousands and thousands and thousands of applications. So it's going to take them some time. I know the SBA is hiring, but it does take some time to hire, onboard, clear, all those individuals. So I would certainly take advantage of both applications now.
Great, thank you. We do have a question, Lynn, I think this applies to you. It has to do with is a hotel required to move a guest every 28 days as they have been required in the past?
No, the logic is, and I'm sure this could be subject to interpretation, the logic is that the state is actually the tenant because the guest is not paying for the room. So since the state is doing that, the occupancy doesn't apply. We've confirmed that through contracting at the Department of General Services as well. So we don't see any of the occupancy or what I would refer to as tenancy issues coming into play with any of these populations.
Okay, I'm not sure if they were referring to the volunteer opportunities or just regular. If someone's paying on their own, though, I would assume they still could be.
Correct. Yeah.
Okay.
If someone's paying on their own and they're a guest, definitely they're going to be considered a tenant after 30 days. And then you also have the eviction programs that are on top of that right now, where you can evict them. They still would have to pay if they're a tenant or they become a tenant, but they don't have to pay immediately, if that makes sense. So someone can go in for 30 days and say on the 31st day, hey, I lost my job and I'm unable to pay, and then you would receive no income for that until they were able to pay. They would still be responsible for that payment, though.
Okay, I think we have time for one more question. In regards to housing the homeless, Lynn, would you recommend getting insurance through them, or should they require a contract indicating how the rooms will be cleaned once they leave?
So my understanding is most of the contracting, most of the insurance is covered during the contracting, but I would also highly recommend that you contact your insurance company and let them know what you're doing with the property. So if there's anything that falls through the cracks from what the state or the counties are covering and what your insurance company covers, that you're covered. So I think it's prudent to reach out to your current insurance provider, but I think the state is going to provide all that liability for it.
Great, thank you. I want to let everyone know that the PPP calculator can be found on the coronavirus resource page. And we did get some questions we didn't get to. We will respond to you directly to get your reply. And again, also always go to our website at chlodging.com, and that's where you'll find our coronavirus updates and resource page. We're updating it regularly, and that's where we'll post today's presentation and PowerPoint. Also go there to check for upcoming webinars. Visit our events calendar to register for next week's presentation. And there's another webinar on 5 proven elements of a successful COVID-19 pandemic plan. Thank you again for listening, and this concludes today's presentation.
Thank you.